hear the birds chirping.
Take all your money, buy Bitcoin.
Wake up every morning and say GN.
Jim. Tuesday. Alright, so mentioned last night the importance of waiting. So yesterday we got a nice move. We got a little bit of the fear, or let's call it the weekend fears, into Monday, and the hedging and the, I think, overly aggressive early selling into the open and off the open, if everybody else actually see more of the stock market from the CME open. But the market opened up with a gap lower Sunday night, bounced briefly Monday morning, and sold off right into the session with a retracement just before it, but still trading lower. And in New York we pushed higher, closing up all of the gap from Friday, actually taking out Friday's session highs, and closing looking pretty good overall, with the VIX as well coming way down yesterday. But most notably, as I mentioned yesterday, it did roll over but hasn't moved below the gap from Friday. That was where we were at yesterday. The VIX came all the way back down, but it stayed elevated, just got back to where Friday's close was, and you can see it just ticking back up going into the close as well. Tomorrow should be the real tell. If this was just initial panic selling of too much quick conditions reaction bounce, expect to see tomorrow continue the direction of last week and this morning, which would mean down on stocks and up again on VIX. So that's what we got. If it was a volatility squeeze and a positioning on the end, and there's more escalation to come. So that seems to be pretty much the way things are going. Oil's ripping to new highs, Nasdaq's making new lows pre-market, the dollar's absolutely flying, and the VIX is back at new highs once again. So there's a good example of trading price, not the news. Nothing materially has happened. In fact, yesterday, when the reports about, it was on yesterday morning's videos, I was talking about the Saudi Arabian refinery that was hit. That was yesterday morning. So that was Monday going into this part here. And as the reports coming out about the refinery being hit, oil kept going lower and lower and lower, and it was lower all the way through the session, or at least flat. And the dollar was flat instead of rising, indicating maybe some kind of reversal. And at that point, stocks were actually rallying. When the news came out about this supposed escalation, or this, what would you consider to be very bad news, that one of the biggest oil refineries in the world is going to hit, that should obviously have catalysts for oil prices higher, and then expectations of inflation go up, and then expectations of risk off go up. And yet the markets were moving the opposite way. You were seeing rallying risk assets, you were seeing volatility go down all the way through that, the VIX. And what it's ended up being is, I wouldn't say, it's never a fake rally. But last night I touched on that with QQQ, because I'm still in that short. That watching for QQQ start closing below above 610, and don't retrace all of today's move on Tuesday. So the market needs more confirmation that this wasn't just a premature optimism bounce. That pretty much confirms that that's all it was. The fact that it's rolled it all over overnight, taking out new lows, would seem to indicate, especially given with where the higher time frames are at with Nasdaq, which has already been bearish. Again, I talked this on Beyond Bitcoin for the last couple of weeks. It doesn't matter if it's an Iran war or any other catalyst. The fact is, all Mag 7 have reported earnings. The Nasdaq reacted negative on every single one of them. You had 4 of them in this week close red. You had 2 more the next week close red. And then we had to wait 3 weeks for NVIDIA to report. And as soon as NVIDIA reported, it went down for 3 days straight. Then, obviously, you just got price itself, which is off the highs and trading below 50 and coming towards its lows. The QQQ just for positions, just in the pre-market. You can see it there, it was down. Possibly going to open at new lows today. And then the VIX, after being rising steadily for the last several weeks, looked like it was possibly going to reverse yesterday. Opened higher, was coming down lower, but overnight, gap higher again. We're now really seeing the volatility shock. And that's coupled with the dollar on an absolute tear here from these lows. which, by the way, is not because of just the war. The dollar has been trying to go lower since June of last year, despite everyone so bearish on the dollar. It's not actually gone lower. It's actually higher than it was last summer. You would think that the dollar was speed running to zero the way people talk about it. There's two ways of looking at the dollar. You have to look at the demand for US Treasuries and the dollar globally. And then also just the DXY, which is just the index, which people mostly tend to use DXY as this, oh look, dollar strong or weak. But that's against the euro and the pound and the Swiss franc and the Japanese yen. So it's against other currencies. Now, in times like this, when you have risk off, you expect dollar up. This is classic. The thing that pumps most in crashes or any crisis, the thing that reacts highest first is the dollar, like every time. Saw this in COVID. It was actually before COVID that the dollar was going down, but then as soon as we got into that real panic week of COVID, first thing that moons and spikes is, of course, the dollar. Then it all settles down, money starts to flow elsewhere. But in the short term, it gets super volatile, and usually have a rush where people are just fleeing to go into the safest fiat currency because you're not planning to hold it for long. That's the other thing. When it's risk off, when it's panic, like a liquidity crisis or some kind of crunch, some whatever, people don't care that the dollar's being printed. They don't care about debasement because they're only planning to sit in it for probably days, weeks, maximum some months. And again, DXY is in other currencies which are clearly in worse shape. I mentioned a couple. Is it Brazilian? What's the Brazilian real? Is it real or REL? There, USD BRL. This is the one which you watch for continued strength. So this would be, if it continues going lower, which it has, this has been obviously going on for months and months and months. And then India. What's that? USD INR. Yeah, well, that's their clear sign. Some of those emerging markets currencies like Brazil or India, if they were showing stable or strength against the dollar, it'd be a sign of this more multipolar world. But certainly not from the Indian rupee perspective, US dollar went higher, so obviously higher there indicates dollar strength. So that's where some of it's coming from. Euro's probably down significantly against the dollar, yeah, after running up for a year, and then I won't say distributing because I don't think people are accumulating and distributing currencies necessarily. It's just a trend that's exhausted. And people are always late. Everybody was bearish the euro over here, of course, when it's at the lows. It was almost getting back to parity, if you remember that. Happened in 2022 when it actually went below a dollar, or a euro, a dollar. And then came back in the start of end of 24 to start of 25, and it looked like the euro was going to go back to that $1 level, or one flat 1-to-1 level. And then it rises and rises and rises, and of course nobody's bullish in the euro until it goes up so much that they actually know it's wait a minute. My dollars get a lot less, or my euros get a lot more dollars, and then suddenly everyone's like, oh, America's off the euros. Doesn't know the nature of currencies that they're being reverting. So this is just very normal. And then this USD JPY, isn't it? Then the Japanese yen and the dollar, which has been rising and rising and rising for years. And then you've had a couple of panics with the Japanese yen carry trade unwind, and then a rerun of that last year, which was never anything. It was just some of these micro dips in it. But now the dollar keeps appreciating. And then the other thing to watch is gold. So I said this quite clearly on Saturday, or on Sunday, about gold and the risks of piling into consensus trades. This should make it pretty clear why you can't make assumptions about what's going to do well or poorly and hang your hat on that. So put the dollar on here. This is the clearest sign from the markets of what I said on Sunday, that this is perceived to be, at least, US dominance, which is gold down, dollar up. Yesterday, they were both sort of moving together, although the dollar was much stronger, as I said, from the gap on Sunday night in the open. Gold went up and went a little bit higher. The dollar was just up, solid, steady, up all the way, and it's continuing higher. And since Monday morning, that's been at the expensive lows. Go lower, go lower, go lower, dollar higher, higher, higher. I mean, if it's risk off, you'd expect gold to do pretty well. If it's war hedging, gold should do really well. This is supposed to be the thing that is the number one hedge against all of this. So why is gold down? It's as simple as what I said on Sunday and throughout yesterday as well. It's two consensus. People are also forgetting price action, which is that gold has already had basically a low off top move and the first crash off the back of that. And this is all coming in for a retest. It's not actually trending higher, but people are buying it aggressively like it is trending higher. So, top for gold, who knows? Don't know, don't care. Not in the business of opinions on it. Gold looks fine, gold can do fine. It's more so really bad timing for people that are trading on emotion. I mean, trading on emotion is always bad. But certainly, when you're buying something up into the last known strong resistance, where it literally topped and dropped 20%, and it's the first retest of that, and then you get too zoomed in, you're only looking at this, you're not looking at the zoomed out picture, and you see war over the weekend, and then gold goes higher. It's a very easy trap to fall into. Need to buy gold, need to buy gold. Why? The hedge for the war that was known about since Trump got into office. The one that had multiple flashpoints last year, including June, when there was the 12-day war. And many more beyond that. Like June 2025 is over here. This is when we had that, which, by the way, coincidentally or not, was right around this area here. Right around when gold had already topped and was coming back for retest. You had the 12-day war. How did gold perform during that? It was red. Why? Same reason. You cannot wait until you see something happening and then say, oh, what's the most obvious thing I could buy? Oh yeah, gold, because war's already happening and I'm hearing about it in the news. You're always going to be behind. Was that bearish for gold? No, what was gold doing? Understanding the price action would tell you. Gold has topped. It's just retested. If it doesn't break below 3,100, it's all good. What does it do? It's consolidating. But the war, 12-day war happens over here. People pile in. And then gold probably goes down 10%, not much, 5%, whatever. But goes sideways. All of July, August, and into September. While at the same time, what's happening? Bitcoin's mooning, Ethereum's on a big run. This is when Bitcoin's going to 120k. So what happens then is people, by the time September comes, the war's up. The 12-day war is way over. That was back in June. Gold, everything's all right, everything's steady, everything's smooth. And of course, gold breaks out, and people who bought here, they sold here, or they just give up somewhere along here because they don't understand price action. You've got to understand cause and effect. Gold was consolidating after a big run. Same exact thing here. It's not about this. If the whole world revolved around the current thing in the news, markets would look totally different. Markets are a discounting mechanism for the future. They're not pricing in just, here's this headline today. It's also, what does this mean for 6 months from now? 12 months from now, 2 years from now. So if you think this is all organic, like this is just bulls buying, this is just more demand than supply. No, this is gold pricing in all the shit we're seeing right now. Higher volatility, multipolar world fears, the fact that maybe the US is losing its dominance as the global reserve currency, all priced in. How do you think it goes from 2k to 5.5k? So it goes back to the same thing. If you want to predict the future, stay out of markets. If you want to make money, focus on price action. You didn't need to know anything at all about any of the reasons behind why gold would be a good thing to buy. You just needed to understand here, back in 2024, that it's had a really significant breakout after a super lengthy consolidation. Multiple years, tried to go lower multiple times, so it's honestly tried to be weak, and then it has an undeniable breakout, which gives you really easy validation as well. If you're getting long, you say, okay, I'm wrong if it goes back below 2,000. And it doesn't go back below when it's doing trends, and no one really pays that much attention. You know this. I look at gold all the time because it's got a lot of relevance, obviously, biggest asset in the world, and it feeds into Bitcoin's narrative in some ways. So I remember this, I remember the breakout, I remember some traders a little bit talking about it, but you know yourself, whether you've lived it or whether you've just seen it. When did gold become like the hottest thing in the world? A couple of times. First time it broke through 3,000, people started to sit and take notice. So when it first hit 3k, during the tariff set off, the tariff war, that was when the stock market was down 20%. Guess what happened here right before gold inside just 4 months? Everybody started saying the US stock market's going to zero. And so this was gold, and this was NASDAQ. This is when NASDAQ was here, and this is when gold was here. When gold was there, NASDAQ was bottoming, 20% off the highs. And it was like, gold just hit 3k, the US stock market's fucked, tariffs are fucking terrible. Gold is your protection against the tariffs. What happened? Gold was nothing then for 4 months, building a really nice base. NASDAQ goes in a rip all the way up to essentially its highs. You will always be fighting the last battle if you're trying to trade news instead of focusing on price action itself. So now, bringing it back to the present, what does this mean? Oh my god, oil to new highs, it's heading towards 80. Okay, let it. What are you going to do? You're going to start following into oil? No. Does it mean anything? What I talked about at the start of the video, that yesterday's move, you just need to hang on for a little bit and see. A lot gets, too much gets. This is how, look, you want to understand why people continually fall for complacency bounces. Yesterday's a good example. But I mean in blow off tops. I'm not talking about it on a 1 hour chart. Now I'm talking about higher time frame stuff. If you want to be able to avoid falling for these very common traps that happen over and over and over and over again, and you can see these endlessly. These are all over the charts. You go back and look at any blow off top like Bitcoin in 2017. You're like, why would anybody be dumb enough to buy Bitcoin here? In hindsight, you say, why doesn't people see that it's clearly broken its trend, structure's broken, it's come over back, it's crashed, it's topped. How does it even go back up to here where people are dumb enough to buy and somebody can even get out almost at the all-time high before it was all the way down 80%? Because when it's here, people think it's back. That's the beautiful thing about human psychology is no matter how many times the same thing happens, People will always find a reason to say this time is different. What's not different is price action, which is why price isn't always right. You can buy something that goes down, you can sell something that goes up. But what will always be the case is broken structure will always be broken structure, and it will most likely lead to what happens next, which is, in this case, a rejection and lower. That's the same thing that stops you from buying every bounce in a bear market, because you take something really simple like 50-day EMAs on there. A better one would probably be like the weekly bands being red, whatever, 200-day, use whatever. And just look at these and like, these are all pumps. Right? These are rallies. This is new highs breaking out. Like, all of this stuff, it's counter trend. And deep down, you know it's counter trend, meaning the market has not recovered yet. And yet, you want to believe. Everyone wants to believe. And so they put belief ahead of logic and lose. And same thing happening, not so much with Bitcoin right now. Bitcoin's just kind of flat. I'll talk a little bit more about it on Trade of the Day. Because Trade of the Week that I was talking about beyond Bitcoin is for Bitcoin above 69 towards the 50-day. And it made a good move towards that yesterday. But like you would expect with the reversal of the stock market overnight, Bitcoin has retraced most of this gap move from yesterday. So back to waiting. Nothing interesting happens really between 62 and 70, but I'd start taking one of those 69. It's really just still this choppy zone. I think Bitcoin's building up better than the stock market, but it's much like it was during the tariff sell-off last year. Bitcoin nuked first, stocks dragging themselves down after. It wasn't so much Bitcoin being really strong as it was that it had already been weak, and it was weaker sooner. I think we're in a similar spot now where 52% off the highs, Bitcoin is just not the right thing to sell. Because even if it does go lower, and it can, it's got limited scope for a profitable trade, number one. Because everyone who's sold or wanted to sell has had the opportunity to sell. And and then the last part of that, the last push is panic selling, which is why it takes so long. You just got a simple way of looking at it is, when you sell or buy in the wrong place, price will tell you. Now, you've definitely experienced this, as I have, many times. Why, when it's going down, is it easy to sell 125, 120, 115, 110, 115, and so on and so on and so on? You could sell almost any of these levels and be right within some cases a few days, some cases maybe you sold like 85 here, you had to wait for several weeks, possibly a bad spot, short term to sell, but then goes from 85 down to 60, okay? Then you got to go from 70 to 60 in a single day, and there's a huge way of selling, massive volume, and then price spends the next month trading inside that. Why? Because of that exact reason, because it's not a good place to sell. So Bitcoin's telling you this through price action. Maybe it's not going to moon higher. It's also not super strong, but it's clearly a bad place to sell because everyone who sold in that one day, everyone who sold Thursday below 70 and down to 60, and on Friday morning down to 60, every single person who sold there has had to watch price go up and down above and below their exit. Probably a lot of them selling lower than where it is now, selling at 65, 4, 3, 2, 1. Having to watch as price spends a month agonizingly staying around their entry. Probably even rallying. Why? It's a bad idea to sell something 52% of the highs in the panic when it's given many opportunities to exit. Before that, you just got to ask, why didn't I exit earlier? That is what makes it a bad thing to sell. Now that there's like a geopolitical macro negative catalyst, the reason why Bitcoin is bad to sell is you have to think, who else is going to come in behind me and also sell it? It's like when you buy something, you need other people to do all the work. You buy at 67, you want to take profit of 100k? Well, you've already bought. So you're hoping that other people come in and do all the work. You're hoping that there's an overwhelming amount of demand, not enough supply, and Bitcoin goes to 70, to 80, to 90, and then to 100, and someone's willing to buy it at 100 so you can sell it. That's how you take profit. Same goes on the other side. 52% off the highs, 5 months of bearishness, 5 red months in a row, sentiment in the toilet. Most longer-term thinkers or longer-term traders starting to think about, okay, probably a good place to start DCAing Bitcoin, adding a bit more Bitcoin, stacking some long-term Bitcoin. So you get this combination of high time frame buyers getting reactivated to buy a little bit, start stacking some demand, and also the fact that it's nuked 52% off the highs, down to 5 months only, sentiment's fucked. Who's left to sell? Don't get me wrong, there are people left to sell, there's another way the sellers can always come along, but not so much when you look at other things. Even take, for example, gold. People are like, but how could gold possibly go down? It's like, there's a war happening, like gold should be up. But gold's also super overowned. Because it's gone up like 3x in 2 years. And it's the same exact thing. If you look at if you just focus on price itself, and you don't focus on what should be happening or the news or whatever, and you take something like gold should go up during a war. It's like, okay, yeah, there hasn't been like World War III. There hasn't been World War III since the start of 1994, and gold nearly tripled. So does gold need there to be a war to go up, or is gold up already because people are seeing the signs that maybe there's going to be more conflict? Now the conflict comes along, and it's like, okay, that's a realization of the reason I was buying it at 2 and 25 and 3k and 3.5 and 4k. Like, there's a lot of people who are buying it during all this for this exact reason, which means what? They bought before, they're not buying now. The people banging out are the people who fell asleep for 2 years and didn't see a rise, or only heard about it from the news. Like, there's a war happening, you need to hedge with gold. Not if you understand price. You'll understand that hedging has already happened. Whoever has bought it has already done it. The pricing in of this is already done. And you would also know this again from price itself. After price is exhausted, it's upside, after that momentum is gone, after it's moving into, again, maybe it's not going to go that much lower. But even if it's a repeat of April, May, June, July, August, that's still, we're like 1 month in to a 5-month consolidation, which is much wider than the previous one. That was nice tight range, 3,500 down to 30. It didn't even break 3K. This has had a blow off move, which means all the hype, all the mania. Remember gold? Remember silver? This was just at the end of January. All that hype and mania where it had 20% intra-week swings. This is gold. This is like the boomer rock, and it's having these massive 20% swings. That tells you where people are feeling the most pain in both directions. There's people who bought the top, they've had to watch gold go all the way down and stay below their entry. There's also people who panic sold the first drop that's seen it rise, and what do they do? No, probably rushing to buy back in, and they're going to get chopped to pieces. The volatility on the chart tells you exactly where the pain is being felt and will be felt. Not really much pain for any of this. No real massive volatility. Gold pretty slow and steady, which tells you that bigger players accumulating, not so much of retail mania. That really did start into end of last year, and especially at the start of this year. So now all gold needs to do is keep going below 5K, so it's going to force something again, and back above 5K, so it's fighting again, to make people spin themselves around in fucking circles. And like, it's bearish, just crashes over it, and it's up or so back, the worst time. Meanwhile, when you zoom out, I said the same exact thing with silver. That's why these levels are marked. I said it on Beyond Bitcoin over all edge last week. Gold up at resistance is a sell. Gold down support is a buy. Because what is it? Well, it's most likely some kind of range. You've got your extremes, closer it goes to 5,600, the more enticing it is to sell. You've got your extremes, the closer it goes to 4,400, the more enticing it is to buy. Because otherwise, you're denying what reality is. Reality says this isn't a trend, because you've now got a high and a low at extremes well above it. So everything in between that is mean reversion, consolidation, which means the lower it goes, the more attractive it is to buy. The higher it goes, the more attractive it is to sell. That's quite literally resistance. That is the all-time high resistance, and this is really strong support in some kind of liquidation crash. It hit some really strong pocket of demand. You know where demand is, you know where supply is. Now you see why people get wrecked, because you get this scary news, this big headline that comes along right when price goes to the area that you promised yourself in your market chart that you would not buy. You promise yourself that, no, this is most likely resistance. No, when price retests highs and lows in a non-trending market, you want to flip the opposite way. It's literally sell the high, buy the low, or do nothing. Until it invalidates that. Like this, like gold from up here, that's the spot you want to sell, the extreme. And I got above it, back below it, but then it stays above and holds, consolidates outside. Okay, cool. Trends back on. Because what? It makes higher highs and higher lows. But when it matters most, and when it's actually topping for a period of time, you'll see that. Comes down, comes back to that, you say, look, the resistance. The imbalance of the daily top. What does it do? Rejects. Comes all back down, finds strong support. So it doesn't even have to go to 0, but it was enough for it to go to 34, down to 31, flush out the latecomers. And then, of course, when it is a proper top, it takes years. In some case, over a decade. And it gives those retests many times. So gold is doing what it should be doing, which is moving into more of a mean reversion type of market state. Silver, much the same. Just that silver has even less reason to be bullish. It's not a hedge against war, it's more of a mania about AI and everything else. And it's just the price got this big momentum and people want to attach a narrative to it. Now it's further rejecting just below 100. More consolidation column, weaker than gold, I should say. Same exact reason why Bitcoin's not a sell at this point, because it's down so much already that either you're buying it for the long term or you're waiting for price to resolve, and that's just where it's at. And there isn't really too much to latch onto for trade like yes, actually, because of rapeseed futures. What the fuck? That's going to be an alt edge this week, no doubt. So yeah, so now you've got the S&P, you've got the Nasdaq. Both clearly, the S&P less so, but probably more so with how much room it has to move lower. But going from trading sideways mostly over 50 days with a quick dip below, then holding, then spending more time as the 50 is now inflecting lower and has tried lower highs multiple times, and it's been pointing this way for some weeks. But I get it, the stock market's been really compressed from an index level. It doesn't mean that everything that's been happening in it is, and you've seen this all happening in real time, where what people want and hope for takes over the analysis, instead of like objective analysis saying that, well, maybe this is the S&P moving with more of a topping structure or some kind of momentum weakness, and it's going higher, and it's higher, and it drops down. Oh, maybe it's going to break down, and then it rallies up. Oh, we're so back, we're all good, we're safe. Oh, wait, was it broken out? No, retest, then it was lower. The real confirmation was there. February when it broke, January was low. Everything else was consolidation. But the thing with the stock market, if you're looking online, first of all, you'll get easily, not trapped, but it's very easy to get caught up in all of the hysteria. Because two things. Number one, perma bears are super annoying. So you'll see this on Twitter online. You'll see these people who are always calling for the top of the stock market every time it drops 2%. And they're all, of course, they're nearly always wrong. Which then creates this false reality where people think the stock market never goes down. That's where you get the complacency. It's just a thing that if you go across multiple years, you'll see short, fast drops like COVID or 1 year bear markets or like tariff stuff. The market does go down. But most of the time, most of the pullbacks are just that. They're actually pullbacks and dips to buy. And so bulls are right most of the time by not flipping to being bears. You don't have to flip to be a bear. But then equally, because the whole world is long and everyone's long stocks, I'm generalizing obviously, but people are not short the stock market. In totality, the vast majority of capital, both in the indexes and across individual names, is obviously long for AI, big tech names, industrials, now energy, whatever. Because the money's made alongside. So then when you do see signs of weakness, it's very much like Bitcoin, except Bitcoin may be even more extreme because it's a lot more, it's a very emotionally driven asset. You've got like hardcore maxis, and you've got people that are like super high on crypto or Bitcoin, I guess now, not so much crypto, but certainly Bitcoin. Like Bitcoin's going to move 1 million, it's amazing, it's digital gold. But you shouldn't also deny reality when it starts to show signs of weakness. You can have both. You can be all bullish on Bitcoin. You can like Bitcoin, but also recognize when trends are weakening. That's kind of where we're at with the stock market now. So we'll see how that goes today. It's down overnight, like pre-market again at the lows, once again, bouncing once again. So it may well give more of this choppiness because equally, as I touched on catalysts, positioning and flows from Sunday, you do have this massive amount of hedging happening, in particular on QQQ, and 595 is the next level to watch. Particularly pass off from yesterday. 595 was a big level for QQQ on its weekly options chart for this week. You see it here. 590. 600 was a big level. 595 was not as big. It's 595, 85 was the one I was thinking of. Those are the levels to the downside. So it's bouncing around 595 pre-session. I think 590, which I did mark yesterday. Yeah. 590 is more of an important level there. And then for SPY, it's below 680. It spent weeks between 680 and 690. Tried to go above 690, failed. It's now trying to go below 680, which it did on Monday. Come back inside, now it's below it. Do we see price stay in those areas? Do we see the Nasdaq here, like in this chop zone of 600, 610, 620? Now it's trading below it. Will we see more of an expansion to the downside? Or, once again, despite the fact that there's very clearly bearish structure on these charts, you also have the same thing like the VIX keeps spiking higher and stocks take a dive lower. People are going to sell, they're not going to rush out and sell their whole portfolio stocks, they're going to short, they're going to buy put options, they're going to hedge for downside. Why? Because there's every reason to. As much as yesterday's rally is like, oh, maybe we're okay, maybe we're safe, maybe we're back, maybe this was nothing burger. As soon as it drops again, because price leads narrative, it's like, oh shit, maybe this is because Saudi Arabia's getting hit and Iran's going to close the Strait of Hormuz and it's all bad. The fear doesn't belong coming back, especially when you see things like crude oil making new highs, when you see gold flushing to new lows, and everyone's like, this is just going to throw people all over the place. Like, wait, I thought gold was supposed to be good when things are bad. Now you see the effect of positioning. Oil rising, that's not good, that's hyperinflationary. I don't mean hyperinflation, I mean like super. It's a super bad sign, and it's a leading indicator for inflation. If inflation's going to rise, then rates are not going to come down, and that's bad for tech. That's bad for high growth stocks. The Fed are not going to cut rates and print money as much if there's oil's ripping and inflation comes back. And we saw 2 weeks ago inflation, core PCE and inflation on PPI, both persistent and higher than expected. So you start to see the feed into this kind of narrative. But in the short term, like we've seen across these last several weeks, it can just relentlessly keep bouncing. Which is why you've got to keep the more zoomed out view, more objective and rational, and just keep something very simple like price itself, and one level, the one I'm using just a 50-day, depends what price is respecting and not. And be very mindful of those bounces. You saw this with Bitcoin, whether you were trading it or not, in the 4 months at the top. It was putting in really clear signs of weakness. It hadn't done this before. It hadn't broken out, then failed, and then retested and then failed, and went lower, and then retested again, and looked like it was lower, and then spiked higher. The point here is all of this was showing Bitcoin going through what looked more like a distribution than accumulation, looked more volatile, looked a little bit more warning signs. But what's important here? You have to think about each of these are a daily candle. So you have the first part where it's like went to 120, looked like rejected pretty hard at that. Went to 112, oh shit, it's going down, and then it bounced back. Oh, we're back at 120 again. Oh no, wait, it's down again. You're thinking, oh, maybe sell, then you sell, it's just come up 113, 115, I don't trust it. Ah, see, it is going down, and then boom, suddenly you're at 120. It's like every time it rallies again, which are just retests of consolidation, It's like, we're back, it's over, we're back, it's over, we're back, it's over, we're back. And then when it is actually over, it turns into cold. It's like, oh, no, we're still above 100, we're still above 50 week, we're still above the green bands, or whatever. Like, no, well, now it's actually showing downtrending structure. I think that's really the visual for stocks at the moment. Not to the same extent. It's nowhere near as far down as Bitcoin was or showing any of those price signs yet. But it is saying that, yeah, let's let QQQ get back above 630 or 640. That really will be your sign of strength from here. Truly, it'll be 650. Because like we saw in Bitcoin, it could rally back to the highs, which is kind of what I'm getting at with this. Is even though it looks like it could go lower and should go lower here, it did that as well in November. From November, it failed to break 590 and hold. Where did it go? All the way back to 630. And then months later to 635. It could go to 585, I should say, and come all the way back to 630 again and still be rolling up. That's the frustrating part of the markets when you're talking about these consolidations, which take longer than the expansion. So, how do you manage all that? How do you trade it? It's got to be price only. You know, I'm short on QQ at the moment. I will not be short if it goes back above 610. From here, at this point, having seen the breakdown, shorter than the retest here, seeing this consolidation forming, survived that one bounce, where it would have took it out overnight, but I don't trade overnight, into the next session, rejected off it. Then seeing the reaction yesterday, which was running back up to potentially take 610, and then reversing it overnight. At this point, it should play out to the downside, and bounces should be lower than 605 or 610, and it should make its way lower. If it doesn't, and it's more persistently sideways, that would be a call for exiting and then re-entry if there's a move, but not just sticking belligerently to, oh, this has to go down. It doesn't have to go down. It just is going down right now. It is not giving any reason to exit. It lost to 50, it's traded low for a full month, it's rejected both times to try to reclaim it. So as long as that structure remains intact, then downside will be the expectation. How far? No idea. My TP is not set to there. It's going to be just whatever price gives. I'm very much looking for signs of bottoming and re-entries and buying opportunities. I just think that with oil spiking and the dollar rallying, these are both risk off. Oil up, dollar off. That's a sign of inflation expectation rising. That's what oil always signals. And dollar up is classic risk off. People are probably exiting risk assets to move into dollars to protect capital. And we'll see how it all settles today. Main thing, all of this is just price. You had bad news on the weekend with the strike, you had these attacks back with the buys getting hit, you had the markets were holding up steady when you think they go lower, Bitcoin wasn't go lower, and then you had Monday, Iran attacks Saudi Arabia, one of the biggest refineries in the world, and oil doesn't go higher, the markets rally, risk assets rally, but then overnight when it seems like maybe everyone's right, then they just turn around and shoot lower. Price itself will give you the most clear indication of what is happening, and the news will tell you what's already happened. And in the case of things like this, where it's only been 3 days, like Saturday, Sunday, and Monday, you can't afford to be so far behind by waiting on the headlines. And you can't trade headlines anyway, you can just trade price. I wasn't short, and I'm not short QQQ because of the Iran war. It was from 3 weeks ago, because of price. And all these things like news event failures and the earnings, and it was lower, earnings, it was lower, those are confirmatory signs like NVIDIA. It was obviously a red flag for bulls because it had a strong earnings report and dropped low for 3 days. And then yesterday it tried to reversal, seems to be reversing that in the pre-market again. Do I care what NVIDIA does? Not particularly. My trade is not on NVIDIA. It is the biggest constituent of the Nasdaq index, but it's just one of 100. If I were trading NVIDIA, I'd be looking at it much more as actually a mean reversion. As much as I think it can go lower from here, it's also back at price support in a sideways range. It's been sideways between 170 and call it 200. It's touched a couple of times in pre-market for 3 months. So, here's not the area to really look for NVIDIA going lower. The area to look for going lower is breaking 170 and closing below. Then that starts to be a mark. Just like if it had a broken hell below 200, that'd be a mark up from this range. And looking at all-time highs retest. If 170 breaks, you look towards 165, 160. If not, still it's just a sideways market. So once again, coming into the session, we actually have the bulls deserting the market. And we have pre-market selling. So we had that yesterday. We saw a strong reaction in the New York session. Overnight, it's been weakness all the way to new lows. But again, that also leaves behind inefficiencies. These are low volume moves. Right? Once you get out of the session, that move down overnight was low volume. It's happening in the pre-market. So be on the lookout for rallies higher. Just then got to look at, do they maintain downtrending structure? If it rallies, but only rallies to 24.9 or about 605, 608, 610 on Qs, that's lower high territory. If it starts reclaiming yesterday's levels, that's when you're starting to see things stabilize a bit more. And that's what I'll be on the lookout for today.
Wake up by becoming rich. Make money by Bitcoin.
Wake up every morning and say,
Good morning, sunshine.
Welcome to the real world. Whoa! Mortgage your house and buy Bitcoin with green air. There's no second.
This was manufacturing PMIs yesterday, which you got, which came in higher than expected, indicating expansion, not contraction, indicating a little bit of an uptick in economic activity there. Above 50 is considered expansion. Below 50 considered contraction, and expect was 51.7 and 52.4. I think a lot of that got overshadowed yesterday by everything that's going on. But it is worth noting that did come during the session and was part of the push higher. But I don't think that was the primary driver, obviously. With everything else going on, there's a lot more that's impacting the market. So trade of the day for today, obviously number one, NASDAQ trade is it's really just about management of it. There's not a huge amount I can do other than just see if this is going to continue confirming what it seems like it's confirming, which is that this consolidation, ever since entry, it's given some bounces, they've got sold into, it's had consolidation, which has failed to break to the upside, it's had retests of 610, which got sold into, and it seems like more likely it's leaning lower, but equally, here's the thing, like, would I sell it here? No, that's why I sold it at 610. You know, so just like it was on the Tuesday, where it's like possibly going to go new lows, but it reclaimed that level and it consolidated for a while. So it's something you want to be mindful, like dynamic EV. The expected value of your position changes as the position develops. Like right now, let's say this was my take profit, it's not set in stone. But as the market gets closer to it, it's actually sitting at an unrealized profit of 2R. And the target would be 4R. So at entry, I'm risking 1 unit for possibly 4 units of reward. Now, technically, I'm risking 2 of open profit and 1 of my initial risk. I'm risking 3 to make 2. If it goes down to the target, that's an extra 2R. If it goes all the way to my stop loss, I'm actually risking 3R. So as positions develop, you don't want to do this like every single day and be looking at, oh, now the risk reward has changed. It's not so much that, it's that combined price. Because this technically is what the position is now. From this point, I'm risking 3 to make 2. Which just means the price does that, I'm giving away all these open profits. But that was also true when it was here, it came back up and it didn't take it out, that was overnight, so it didn't actually trigger because it wasn't during the session. Nearly triggered during the session, but dropped, got away with that, stop protecting me, all good. Sometimes it gets stopped out, sometimes it doesn't. It's all about the position you're taking, and first of all, this is a swing trade, so that can take weeks to play out, as it is now doing. It was like the 11th of February when I entered it, and it's now the 3rd of March, and we're still lower, yeah, it's in profit, yeah, it hasn't fully played out yet, it may not. So how do you manage that internally? Well, usually, if it's going in your favor, it will give you reasons or triggers for areas that could allow, I wouldn't see anything here that would confirm that I should move my stop loss to break even, which is why I didn't. Why did I not move my stop loss to break even? Because price didn't break new structural lows. If it had broken to new lows and we closed at 590, then that would be a low, a high, and a lower low. That could justify moving the stop to 610, as it's now should be in a point where it will go lower. If it's going lower, it should go back to the entry point. That still hasn't happened. If we get that, if we get a new daily close lower, as you see on the daily close basis, that would be 596. If we have a daily close below that, the stop will move to 610, manage that position. Because now it's actually making a new structural, break structural BOS. So internally, within this move, it's just moving the way that it can do. Sometimes it will go really fast in your favor, sometimes it takes a little longer. But the 50 still slips lower. 610 does not get reclaimed. It tested it once in that whole time. Got above it briefly for one close, then right back below it. And then the 50 itself, price can get above it like it did here, but without it sloping back upwards. So this would be more so if it comes down. Let's say later on, the 50-day keeps coming down and price goes lower and price goes back up. Price can come up again and close above it again, but still not be uptrending. It could close above it, still be in a downtrend, still downward sloping, just be a retest and continue lower. It's more about when there's price reclaim levels in ways that would typically indicate that the downside directional move is not playing out. Got a really clear example of this back in November. Price was very clearly trending lower, lower high, lower low, lower high, lower low, lower high, lower low, all the way down, 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 down. And then it gave a structure break. So it reclaimed a prior day's high after this whipsaw day that we had with the Nvidia earnings, and a failure to break down, strong rally recovery, reclaims the 50, you'll see here, reclaims the 50, and it starts to slope upwards. The basic close would have been on that daily close, if you were in short some way down. That's your earliest point. You can say, okay, a lot of messiness, a lot of chop, but big rejection failed, also recovered, rallied, got back above, now it's trending higher. And even though it doesn't go to new all-time highs, it is a smart move to get out of that position, because from November all the way through December and all the way into February, price didn't get back below that level. Even now, it's only just starting to. Opportunity cost. You don't want to be sitting in a short all of December, all of January, even into February, because technically if your stop is at the highs, you could still be short from November right now and still be directionally correct, maybe, but really you have to sit through a long consolidation. So timing matters. That's why the market does need to move. It doesn't have to move like the next day. Depends on the setup. Depends on the time frame you're trading on. It's on a daily chart. So equally it could break lower or consolidate like it has. Main thing is that there's nothing here that's confirmed bulls are back in control. There's no bullish market structure breaks. There's no real signs of recovery. We're not above the 50. It's not sloping upwards. If it goes to 620, first of all, it'll stop me out. But if it goes to 625 and holds there, then yeah, you'll have 50 sloping upwards. You'll have price reclaiming. Hopefully building a base to break out later. That's not happening just yet. As for Bitcoin, a few things. Monthly, we got that nice close. So now looking on the daily for potential structure to build for a run to 94, which is at the midpoint of this downswing. That's more on the higher time frame, so I could see Bitcoin just moving through and then giving a nice move up. Trade of the week from Beyond Bitcoin was more of the short term view that if we get above that 69 level, you could see it going to, let me get this over here, going towards the 50 day. Like this, long as above 69 equals 75, or up to 75, sorry, towards 50 day. So we got that first move, like I said yesterday, that Monday really give a decent confirmation that this path could be intact, and as of today it's still intact as well. But above 69 is where I would see it as being actually tradable. The reverse it's had this morning, possibly come back to 67, it's just retraced most of Monday's move. Don't forget to start of the month as well. We've seen a new month beginning with some upwards. Markets tend to have a directional move in one way or the other at the beginning of the month. So I would still be waiting. Once we start getting above Monday's close, which is right around 68.8, so call it 69, that's when I could see short term, whether it's a day trade, scalp, multi-day hold, I don't know, it would be a route, we would give room for it to squeeze up towards 50, towards some of these retests of 73 and some of the liquidity. But if not, this is not a trade spot. I'm not long Bitcoin yet on a low time frame basis, because that isn't there yet. Bitcoin can just as easily go down to 63 and back up to 69. It can just keep compressing, which it has been doing. It's still in this lower volatility state. It's still coming down off of its big move. It's failing to go lower, which is the main thing why I think it can go higher, but no trigger there just yet. And for that, I would need to see price reclaiming these levels above. It's getting dragged because the stock's getting so low overnight. As for Bitcoin, it's really just coming back into prior demand from yesterday. If that can hold and it can reclaim, looks really good. But for right now, nothing quite yet. I'll be watching the daily one. So today's plan, manage QQQ. Also, longs, looking at obvious things like Exxon. Well, not so obvious then, is it? Or yes, obvious, but not so soon. So what we see with Exxon in yesterday's move, where is this? Oh, wait, why he's not marked enough? There we go. Looking at the move on Exxon, this is a red day, it's a red candle. It gapped way higher, opened up way higher, and through New York it sold down into it, actually closed lower. So Exxon, big false breakout of 156. Why? Big move up, becomes very obvious, gets on everybody's radar. First breakout attempts often fail. I think it's just too much of a consensus. War, oil up, by the big oil companies. And it gives a good opportunity for those on the other side of the trade who got in before to take some profit, although those are FOMO buying. Those would be like the obvious longs you look at, would be things in the energy category, which is still trading a little bit higher, but had a red session yesterday, so it went higher in the overnight and after the weekend, but was a red session. Industrials had a good strong move through, but reversed all that in the overnight move. And so yesterday, going into the full session, you saw a strong reaction higher as the stock market rally. You saw industrials make new highs and closing new highs. Overnight, they're always whacked. Don't think that's in bad shape. I think it's probably going to still get bid, but it's really showing that the market's not quite giving up so much in terms of easier breakout opportunities just yet, which makes sense. All the way from November through December, January, February, but it's really steady, bid up, consolidate, breakout, steady consolidation, breakout. It's had pretty easy conditions if you were in on the earlier parts of it. Now it'll likely get a bit trickier, because these are still stocks, these are still risk assets, to the extent that if you're buying an individual industrial name, or you're buying even like a oil company, or it's in the energy category, these are still, each individual stock you buy is still a trade, and the trades can lose and go against you. Just like gold, for example. Gold does typically do better in risk-off environments, but you're seeing the opposite of that today. Why? Because speculation is still people taking directional bets on something, and the higher time frame view of this can be absolutely it's going to new highs, but people who bought into yesterday's breakout, as it's going to open today, gap lower, are probably going to get taken out of that move, and maybe industrials like that go higher again. It might not even end up going any lower, but short term, same as this breakout here that failed a couple of weeks ago, people can still get themselves chopped up by being in the wrong position as price tried to appear, and sharp drop, lots of chop. And the market's not giving up too much of those opportunities, because when you look at the VIX so elevated, that does eventually affect everything. High volatility is not really good for any of these, and that is something that also needs to resolve itself before we would see. Here we go. that higher volatility would need to resolve itself before you see good conditions for broader market rally. Typically, in these spikes, they correlate with market sell-offs or at least a lot more China's and mean rare conditions. That'll be today's view.
Can't fucking believe this. Can't believe it. Just can't believe this, man. Can't fucking believe this shit, man. And I try to enter off this wick and I fucking can't even enter, bro. Now we're gonna make our fucking move lower too. Man, fuck this fucking shit, bro. Some bullshit, man. Well, I guess I'll just wait for Wednesday, wait for tomorrow. Move on to other things. If we can't get this fucking retracement, I don't think we're going to. Already had that retest. There's no fucking way. Unless we go down here, tap this, come down. That's some fucking bullshit, man. Bullshit ass day. Bears are in control this entire fucking time. I'm fucking short this entire time too. Here we go. Now we make the fucking move, of course. Original entry would have been fucking perfect, but we got stopped out. Right at break even, just hit our fucking tick or break even. It's not even about the money. It's not even about like anything. It's just fucking this trading. It's about the trading. When you get bullshit like that, it's like fuck this. Like I don't need this shit. I don't need this fucking stress, bro. Fuck you. I don't need this shit, man. Like fuck you, bro. Fuck you. Fucking cunt. The fucking pre-market analysis is fucking perfect. I entered all the way up here and I got fucking stopped out. Like the fuck? I entered right here. Price comes down and then comes stop me out and then goes all the fucking way in my direction. Fuck this, bro. Fuck this shit, man. Some fucking bullshit, bro. I'm short this entire fucking time. It's not even about the money or anything. It's just about the fucking bullshit. Why is it that like why is it this way? I get like really today should be like okay, whatever. It's just how the market's gonna move. I don't care. Like, just move on. Man, this is such a bullshit entries, bro. This is fucking stupid as fuck, man. This is some fucking bullshit, I swear to God. Nah, market doesn't control me, bro. I don't care. You cannot control me, bro. I don't care. I don't even care that you're going to fucking full take profit and more. And you fucking stop me out just perfectly. I don't care, man. I don't care. Ha. Thought you could go without me, huh? Thought you could just move without me to the sell side liquidity? Caught your ass. Caught your ass slipping. Caught your ass slipping, man. You thought you could run off without me, bruh? Nah. Nah, I caught your ass slipping, bruh. You can't run off without me. I know where you're going. You think you could do all this fuckery shit? Move to break even. If we get stopped out, then I don't give a fuck, man. This is the best fucking shit that I could fucking find. I don't give a fuck, man. I don't give a fuck, bruh. Fuck this. Fuck this shit, bruh. I don't give a fuck, man. I really don't. Like, at this point, I really don't give a fuck. I really don't give a fuck, bruh. The fuck, man. It's fucking 100% Bears, bro. All the Bears are in control. I'm going down to this sell side liquidity here. We're increasing in trend too. I can't believe this shit, man. I really can't believe what the fuck is happening right now. We're at that 0.5 Fibonacci retracement. Half of that 15-minute body candle, so we'll see. Look at this seller's volume. And I was in all the fucking way up here, man. And I'm sitting here now, I'm doing this bullshit, man. Alright, I gotta think about this because this is ridiculous. Let's just read the Bible for something. Just open any page, see where we're at, see what we're doing with the Bible. Alright, we're in. Clean retracement. Come on, man. Reject, bro. Fuck, man. Cow, we have this pullback. We have all this persistent volume. This is bullshit, man. Drop. Fucking drop. We're trending down. Drop. Trailing my stop loss aggressively too, bro. This is some fucking bullshit. Push down. Push. Down. Right now. Push down. You can't just stop me out like that and have all this seller volume and go in my direction. Nah, that's not how we do this shit, man. That's fucking bullshit. Push down right now. Keep pushing. Go. Go. Go under the EMAs. Go under this fucking full candle. Make a new low right now. Before I fucking do something to you. I really do it to you. I swear to God. Sorry, God, but fuck. Push lower. Don't even touch my freaking stop loss right now. Keep going. Push lower. I'm not about to play with you. Keep pushing, bruh. Because you cannot just go up and just stop me out like that. I'm not having that bullshit, man. Push lower. Push lower, bro. I swear to God, if you touch this, bro, you better not. I'm gonna shoot you. I'm gonna shoot you. Push lower right now. Push lower, bro. Don't even try. I'm shooting you. Boom. Boom. Keep pushing lower, bro. If you don't push lower, I swear we're gonna have a problem, man. If you stop me out, bro, we're gonna have a problem. Push lower. Push lower right now or you're gonna have a problem, bro. I swear if you stop... You gotta be kidding me right now. You gotta be kidding me right now, man. What is this trading right now, bro? Honestly, what is this trading? What is this bullshit, man? What am I doing, bro? What is this bullshit, man? What the fuck? Persistent seller volume. How is the market even holding up? Who's holding the market up? It's persistent seller intuition Fucking institution volume selling the market. Like I can't even long here because like look at this, bro. Look at all this seller volume. I think it's time for me to go, bro. It's time for me to go to the gym, man. I'm really tired of you. I'm really tired. I'm really fucking sick and tired of you. You know that? Nah, bruh. Nah, you think you could just get away from it? You think you could just get away with this shit, man? Watch. Watch what happens when I come back tomorrow, bro. I'm trading my perfect system, my perfect setup, and you ain't gonna do shit about it. Can't just stop me out like that. You ain't gonna do shit about it, bro. You ain't gonna do shit about it, man. What? What? You ain't gonna do shit about it, man. You ain't gonna fucking do shit about it, bro. I know you wanna go. I know you have persistent volume to the downside. This is just freaking sellers. People are, they're selling into it. It's absorption. I know what the fuck I'm reading, bruh. You can't fucking fool me, man. You can't fool me. Go. Push. Push, man. Make the move, bruh. Make the fucking move, man. Been doing this all day, haven't you? Good. Good. Make that fucking move, man. I'm not about to play with you, bruh. Take profits all the way down here, bruh. I don't even want to know anything else. I don't want to set no alerts for break even, for nothing, bruh. I want to see you go straight to the take profit. Because if not, bruh, I fucking hate you, bruh. I really hate you. I hope you know that. I really hate you. I really fucking hate you. I hope you know that. There's no way. Okay, if we break these levels, then fine. If we break these levels up here, then fine. But there's no way all this seller volume There's no way you're getting away from me like this, bro. There's no way. You cannot just run off on me like that, man. Alright, we rejected it so many times. We rejected this sell side liquidity level so many times. How many times are you gonna keep tapping it? How many times are you gonna keep tapping it, bruh? I can't keep fucking doing this, man. I can't keep doing this, man. Break even again. All the seller volume. All this seller volume, all these rejections. There's no way, man. There's no fucking way. It's such a rollover. It's such a clear rollover. I hate this market shit. ugly that shit is, man. Shit is ugly as fuck, bruh. I just don't get it, bruh. The fuck? One minute market structure rotation, boys. Come on. How much was that? Half a tick? 0.25? Not even surprised. New buyers are in. I knew they were buying this fucking dip. Half a tick away from that entry, eh? Just push, bro. Push without me. One. Half a fucking tick, bro. Half a tick! Not a quarter of a tick. There's quite literally nothing here anymore. fucking knew it was bullish, man. I knew these people were buying the dip. I knew we were buying the dip too, man. Why couldn't I have entered all the way down here, bro? The 1 minute. I wanted to enter right here. I wanted to enter right there. But nah, I couldn't get it. Couldn't fucking get it, man. Alright, guys. I'm done trading for the week. This is just bad trading. Fucking done trading for the week, guys. What the fuck have I done? Wanted to enter in all the way down here. Clearly saw that we were buying the dip. Really just disappointed, honestly. This shit looks so ugly. It's the worst performing day ever. I gotta stop trading, man. I'm fucking done, bro. I'm done trading for this week. I'm not trading no fucking more, bro. I'm not fucking trading no more, bro. I don't want to trade no more, bro. I don't want to fucking trade no more, bro. I just fucking fucked up, bro. Guys, I fucked up, man. I don't want to fucking trade no more, bruh. I'm done with this shit. There's so much bullshit. Like, what the fuck have I done? What the fuck have I done, bruh? Literally just so much bullshit, bruh. Fuck, man. What the fuck have I done? There's so much bullshit. Yo, what did I actually do, man? What did I actually fucking do, man? My impulse control is fucking terrible. Like, what am I doing? Like, I'm just setting myself back from all this fucking progress that I've made and shit. Like, what the fuck am I doing, man? What have I done, bro? What the fuck am I doing? I don't know what the fuck I've done, bro. Now I'm gambling. Now I'm fucking gambling. Alright, guys. I don't give a fuck about this fucking trading shit for the rest of this fucking week. I'm done. I don't even care if this hits full take profit. I don't even care if this hits my fucking stop loss. I'm fucking done. I'm focusing on other things for like, cause my mind is not there for trading right now. I don't know what the fuck it is, but my execution is not fucking there for trading. So I'm done. If this hits full take profit or stop loss, I'm done. My execution for the past like 2 weeks is terrible. So I'm done.